Hello and welcome back to Business Matters at The Hindu with me, K. Bharat Kumar. If we thought that the COVID-19 pandemic had turned the world upside down for us, Russia's war on Ukraine has rocked the economic boat even further. The International Monetary Fund in July cut global GDP forecasts, indicating that the economic outlook had become more gloomy and more uncertain. It said that together the world would grow 3.2% this year, 2022, and slow further to 2.9% in 2023. Ever since Russian tanks rolled into Ukraine in February this year, Western nations have come together and issued sanctions hoping to punish Russia for its actions. How has that changed global trade? Let's take a look. First off, how has the Russian economy performed? Professor Biswajit Dhar, professor of economics at the JNU, says that the sanctions have not hurt Russia as badly as was expected. First off, the ruble traded against the dollar plummeted from 76 all the way to 120 when the sanctions kicked in. But ever since then, it strengthened all the way back to 51 and has now stabilized at 60. Russia's GDP too has not performed as horribly as expected. It was originally expected to contract about 10% this year, 2022. The IMF in its April estimate indicated that the contraction would be about 8.5%. In July, it revised its estimate further downwards to 6%. The private sector is far more optimistic. JP Morgan indicates a contraction of about 3.5% for the Russian economy in 2022. Inflation in Russia, like in other nations this year, has been high, but the Russian central bank has projected inflation of about 12 to 13% for the year compared to the 18% seen in April. But all of these does not mean that Russia is back on velvet again. If the war continues, Russia's economy could fare worse. How has India's trade with Russia fared in recent months? In earlier episodes of Business Matters, we've seen how both India and China have gobbled up far more quantums of oil because Russian oil came to us at a discount. In recent months, Russia's contribution to total oil imports for India accounted for anywhere between 14 and 20%. Pre-war, this was less than 2%. Right now, the oil that comes to us from Russia is about at a 20% discount to global market prices. A recent Reuters report indicated that in January-June 2022, that is a 6-month period, India imported about 6.82 lakh barrels per day from Russia. This compared with 22,000 barrels a year earlier, an astounding growth. India has also increased imports of fertilizers from Russia. Russia's contribution to total fertilizer imports by India used to be about 6% pre-war, now that's 20%. And fertilizers too are said to come to us at a discount of about 20% to global market prices. In just the 3 months ended June 2022, India imported fertilizers that totaled up about 70% of all the fertilizer we imported from Russia in all of FY22. Other than oil and fertilizer imports, India has also increased imports of coal, non-industrial diamonds and sunflower seeds from Russia since the war began. Late last month, our sister publication Business Line reported that Russia has circulated a fresh list of items such as medical equipment, pharmaceuticals, chemicals, industrial equipment, garments, furniture and jewelry that it wishes to import from India for a more balanced bilateral trade and a sustainable implementation of rupee-denominated payment mechanism. Both the US and Europe have championed the case for isolation of Russia from the global economic order. In this context, how has trade from these geographies with Russia changed? Professor Dhar of JNU cites official US trade data to show that in the 6-month period ended June 2022, overall imports by the US from Russia have gone down, but imports of certain items have gone up. Fertilizer items went up by 32% from a year earlier. Rubber, 13%. Marine products zoomed 87%. Wood and related items, 78%. The European Union has been able to bring down oil imports from Russia, but overall imports have zoomed 79% in the 6-month period compared with a year earlier. Which other countries have raised the trade tempo with Russia? Interestingly, Saudi Arabia has increased the imports of, guess what, oil of all commodities from Russia. Saudi Arabia is said to be importing oil from Russia for use in power generation while exporting the crude oil from its own fields in the global markets at elevated prices. A Reuters report in July tells us that Saudi Arabia doubled its imports of crude oil from Russia to 647,000 tons in the 3 months ended June 2022. This compares with about 320,000 tons a year earlier. In all of 2021, Saudi imported just over 1 million tons of crude oil from Russia. A New York Times article last week cited regulatory findings to show that Kingdom Holding, run by Saudi royalty, picked up stakes worth $600 million in Russian energy majors such as Gazprom, Lukoil, and Rosneft when their shares plummeted earlier this year due to Western sanctions. Professor Dhar of JNU points out that the UAE, or the United Arab Emirates, has stepped in an unexpected fashion. Though a lot of aircraft in Russia have been grounded because of the souring relations with the West, the number of flights from UAE to Russia has risen sharply. Professor Dhar also says that there is speculation that some of the exports that the US and EU had stopped to Russia were actually now being routed through the UAE. In short, Dubai is providing the connectivity that Russia needs with the rest of the world. Professor Dhar says it's interesting and nobody has expected the Middle East to step up in this fashion. There are also parts in the global trade relations map that are still moving, and these moves may or may not have anything to do with how countries look at their trade relations with Russia. India, for example, last week opted out of the US-led IPEF, or the Indo-Pacific Economic Framework. The IPEF has 14 member nations, including Southeast Asian countries, Australia, New Zealand, South Korea, Japan, and India was the only one of those 14 to opt out of the trade pillar of the framework. It, however, said that it was happy with the outcome statements on the other three pillars: supply chains, clean economy, and the anti-corruption and tax pillars. India has said that it opted out of the trade pillar of the IPEF because the contours of the framework had not emerged yet. It said it needed to see if there are benefits to member nations or if there are any restrictive clauses, especially on environment, labor, public procurement, or digital trade, because any restrictive clauses, for example, on environment, may end up as possible discrimination against developing nations, says the government, because then it would go counter to its imperative to provide low-cost and affordable energy to the growing needs of our economy. As things stand right now, they seem very fluid. The next 6 to 12 months promise a lot of action as things evolve. What do you think? How do you think global trade will evolve? What directions will it take? Let us know in the comments below. Till the next episode of Business Matters, it's goodbye from us and have a lovely week ahead.